Hello and welcome everyone to the week ahead commodity report for the 25th to the 29th of March 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we'll be reviewing gold, silver, crude oil and platinum prices for the week ahead. So first of all, we'll just have a quick rundown of some of the major movers we've seen over the last few days. Last week we saw gold prices breaking out to their highest level in nearly 2 months, as on Friday we saw weak economic data from the Eurozone exacerbating fears of a global slowdown, weighing on overall risk sentiment and putting gold on track for its best week in nearly 2 months. Hedge funds and money managers also increased their net long positions in COMEX gold over the latest week. That's also the case, in fact, for oil prices too. Oil prices broke out to 4-month highs last week, and we've continued to see hedge funds and money managers raise their net long positions on US crude futures and options over the last week too. Meanwhile, oil prices, they broke out to 4-month highs last week. However, we did see them pull back slightly into the close on Friday, dropping back 2%, slipping further from those highs of last week as focus did shift on the lack of progress in the US-China trade talks, as the grim manufacturing data from Germany and the US that we had on Friday reignited fears of a slowdown in the global economy and overall oil demand as well. But is that pullback going to set up for a buy opportunity for crude oil? So let's actually move over to the charts. I'll talk you through some of the trade opportunities and the setups that we're looking at as we go into next week. Now, for those of you that do follow our week ahead commodity reports, you will know that we've been targeting $60 per barrel on crude oil for quite some time now. And last week we hit that level. So we hit that profit target. In fact, we've been long on both Brent and WTI crude oil over the course of this month, getting in and out multiple times of swing trade positions. We've now banked profits last week on oil, so we are looking for re-entries now as we go into next week. So first of all, let's just have a look at WTI crude oil, and I'll challenge us all just to have a look at the weekly charts here today. So we're going to go through analysis on the weekly charts for oil, for gold, for platinum and for silver as well, so you can get a view of the higher time frames and really what we're looking at as we go into next week. So first of all, if we have a look at oil here, so this is US oil. You can see very clearly on the weekly chart we had that breakout push higher last week. We've broken out to $60 per barrel. The price action has pulled back slightly on Friday, but no doubt we're seeing some profit taking last week. We're also finding major support as well around that $58 per barrel handle. If we zoom out a little bit again here on the weekly, you'll see very clearly where this has been a major level of resistance turn support. Previously for US oil, we're building up a V-shaped reversal pattern as well on the higher time frames. For me, as we go into next week, I want to see evidence that US oil is getting supported, and if it does get supported next week, I will look then to be a buyer on pullbacks and looking for a revisit back towards that $60 per barrel handle. So we have seen hedge funds and money managers, they've increased their net long positions. We've also seen a reduction again in the overall oil rig count on Friday, which provided a bit more support to oil into the close last week. As we go into April, normally it is a strong month for crude oil prices as well, and you can see here where oil has been building up a strong base really since the beginning of the year. So oil is up over 25% since January, where we saw it revisit very close to $40 per barrel. It's now up more than $20 off those lows that oil revisited in mid-December to break out from $40 all the way up to $60 per barrel. So we're looking to capitalize on pullbacks as potential buy opportunities as we go into next week. So keeping a very close eye on oil here. If I just show you the monthly chart as well, you can see here where we had that bullish engulfing candle over January, further push over February and also March as well. So slowly but surely we're making a move back towards the swing highs here. So if we can continue to drive higher, break above $60 per barrel over the next quarter, so over April, May and June, if we do see a break and close above 60, we could then start to make a move back towards 63 and then 67 as well for US oil over that period, so over the second quarter. So again, just taking you back to the weekly chart, I'm looking at pullbacks as buy opportunities on oil as we go into next week, as long as we get confirmation on the lower time frames. We do need to wait for that confirmation, but at the moment that is going to be the trading strategy for WTI crude oil. Now I'm just going to take you over to Brent crude oil. I will highlight something which has come up time and time again, which I've had quite a few questions on. So just to show you this very simply, okay, just to keep you on the right side of Brent crude oil, go go ahead and add that 21-day moving average onto your charts. Now, this is very simplistic, okay? You want to bear in mind more with your strategy than this, but I will show you something which very simply does work with Brent Crude Oil. If you look at the amount of time since we broke back below the 21-day moving average, continue to see Brent Crude Oil sell off all the way from $80 per barrel back down to $50 per barrel. So that was over a $30 move, or 3,000 points to the downside. If very simply you continue to sell short whilst the price remained below the 21 MA and was unable to close above it. The same thing is relevant to so far in 2019 as well. So since we broke and closed above the 21-day moving average in the first week of January, Brent Crude Oil specifically, has not broken and closed below that level. Each time it's come back to retrace towards a 21-day moving average, it's turned out to be a great buy opportunity. And really the only way you would look at the trend potentially changing there would be if oil broke and closed below the 21-day moving average and then start to pick up momentum below that. But so far it keeps getting supported at that zone. So you can see here on Friday we retested it at $67 per barrel. So I want to look for evidence as to whether we will springboard higher and whether this will just be a great buy opportunity in order to take Brent Crude Oil back towards $70 per barrel. So just keep an eye on it. A bit of a tip there for you. It's very simplistic, but it does work, okay? And often some of the best ways to look at the markets can be quite simple from a technical point of view, but then you want to marry that up with your fundamentals, research, seasonal cycles, and everything else, of course, that we cover at the Gold and Silver Club. Now, moving over to gold, let's put this into the weekly chart here, and we're going to go through the weekly price action. Now, we mentioned this last week, 2 points here. So number one is that gold continues to form here on the higher time frames on the weekly chart. You've got higher lows, higher closes, and higher highs as well. We've closed at 1,313 into the close on Friday. The other point is that hedge funds and money managers, they've increased their net long positions on gold. We've also got Brexit headline risk as we go into next week and as we go into April as well, and gold is definitely being the beneficiary of that. Each time we're seeing a big sell-off on the pound US dollar, we are seeing money come into gold. We're definitely seeing that inverse relationship at the moment. If you have a look at the overall price structure on gold into the close on Friday here, closing at $1,313 per ounce, I'm looking at the potential now for a further move higher, taking the price up to 1,300, about $26 here. So if we get another breakout higher, that would be the next major level of resistance, and I'm looking at a buy opportunity if we pull back to around the 1,300 zone. I would be looking at roughly that range going into next week, so above 1,300s up to approximately 1,326. Of course, if we break above that level, then that opens up the door to a retest of the previous swing highs here. I don't think we'll see that next week, but you never know, because we don't know whether we're going to see a hard Brexit next week or whether we're going to see a delay taking Brexit out to April. So we need confirmation of that, of course, as we go into next week. So that's what I'm looking at on gold. Again, I'm on the weekly chart. I'm looking at here on gold a higher low, a higher close, and a higher high. And just keep it very simple on gold as we go into next week. And I'm looking at approximately a 200 to 250 point range on gold for next week. Now, moving over to silver. Silver on the weekly chart, very clearly we've come back up and retested previous level of support, term resistance here at $15.61 per ounce. Silver also has a higher low, a higher close, and a higher high here going into next week too. So potentially if gold does catch a bid, we could also see silver do the same, especially if silver can break above $15.61. That does open up the door towards the swing highs again. Now, normally the month of April is strong for the precious metals, but the final week of March, not so much. But this year we have Brexit, obviously a lot of uncertainty going into next week, so I don't know if that will be a bit of a wild card for the metals, and we might see an outlier week here with respect to potential breakouts next week for the metals, which doesn't marry up with normal seasonality in previous years at the end of March. But Brexit could change things for the metals going into next week, so we really want to watch out to see how things play out with that. Other than that, I would look at a range right now of approximately $15 per ounce as the lower end of the range, and the upper end of the range right now is $15.61. If we can break through resistance here, that does open up the door for then a breakout towards the swing highs. So that's what I'm looking at on silver going into next week. Then moving over to platinum. So platinum broke out back towards the swing highs last week around $870 before actually actually falling quite fast over Thursday and Friday to the downside. But if we look at the weekly chart, we've got a higher low, higher close, a higher high here as well. So ultimately, platinum might be able to also catch a bid next week if we do start to see it pick up momentum back above $850. Of course, if it pulls back and starts to roll over, I've mentioned multiple times before that I'm interested in buying back into platinum if it was to pull back towards the $800 per ounce zone. On the flip side of that, if we did get more momentum to the upside here and started to see a breakout, there might be a trade opportunity from 850 up towards that 870 zone. Definitely keep that on your radar as we go into next week. And of course, if you would like to join us at the Gold and Silver Club and join a community of successful traders, there is an opportunity for you to do so. As a private member of the Gold and Silver Club, you get access to exclusive live trading room webinars hosted during the week. You get access to real-time trade alerts, those are delivered via WhatsApp and email. You also have access to all of our trading research, our market insights. You get your logins to the Private Members Academy membership site where you can go through all of our training material, all of our research, all of our strategies, and you've also got access to support and one-to-one mentoring. So very simply, to make an application, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And make sure you also subscribe to our YouTube channel. That way you're always kept updated with the latest commodity reports.